Real estate investment trusts has been around since the 1960s, when Congress decided to let individual investors partake in the returns of large-scale income-producing real estate projects. The move was intended to stimulate the economy, and investors haven't looked back since. Over the last 25 years, Million Acres points out that real estate investment trusts have outpaced the total annual returns of the S&P 500, 12.6% and 11.9%, respectively. Today, real estate investment trusts has become a staple in diversified portfolios. These investment platforms are nothing less than a great way to break into a hot real estate market. In this video, we are going to talk about investing in real estate investment trusts for beginners. If you are interested, so stay tuned into the video. Definitely you will find some value. Let's move on towards the topic. Real estate investment trusts reward investors with an attractive alternative to traditional exit strategies. Traditional real estate investors spend their time investing in physical real estate assets, buying and selling properties. Real estate investment trust investors are more interested in real estate companies and their respective dividends. What is a real estate investment trust? Real estate investment trusts own, finance, or operate income-producing real estate assets. That said, not all income-producing real estate assets are cut from the same cloth. Real estate investment trusts hold a wide variety of assets. Office buildings, malls, apartment complexes, hotels, self-storage facilities, and warehouses are all common holdings. Most real estate investment trusts have developed a reputation for owning physical real estate assets and generating income by leasing them. Retail mall real estate investment trusts, for example, make money by leasing storefronts to subsequent businesses. Apartment real estate investment trusts generate income by leasing units to individual tenants. While their target customer may be different, the business strategy is the same: own physical real estate to lease for profits. Not all real estate investment trusts own physical real estate assets. Mortgage real estate investment trusts offer financing for others to acquire income-producing real estate. While mortgage real estate investment trusts don't collect rent like their counterparts who own physical assets, the financing they provide allows them to generate income off the interest on each investment. There are several types of real estate investment trusts, but each company's business strategy can be broken down into a simple purpose: to generate income from real estate assets. Real estate investment trusts are in the business of owning and financing real estate. How to invest in real estate investment trusts. Real estate investment trust investing isn't all that different from trading on the stock market. Real estate investment trusts are molded after the same mutual funds most people are familiar with. The money spent on shares is used by the respective real estate investment trusts to invest in the assets they choose. While investors are contributing the money, the real estate investment trust is actually deciding what to do with it. More importantly, real estate investment trusts award investors the opportunity to take advantage of this historically prosperous real estate market without having to take out a loan. Real estate investment trusts allow investors to invest in real estate without actually buying physical assets. They grant access to the companies which invest in real estate. Not to paint with a broad brush, but all investors need to do is sign up with a brokerage, mind due diligence, and invest wisely. There is more minutiae that must be taken into consideration, but that's the gist of it. Not unlike every other type of investment vehicle, real estate investment trusts investing comes with an inherent degree of risk. Investors must acknowledge this risk and understand that the proper education and knowledge can reduce their exposure to it. No investment is risk-free, and real estate investment trusts are no exception. However, a well-devised investment strategy can potentially lead to years of lucrative profits. Are you still watching my video? So definitely you will like my other videos as well. If you are interested in stock market or investing, and you don't subscribe to my channel yet, so subscribe right now because I upload these types of videos regularly. Now move on towards the topic. What are the types of real estate investment trusts? Real estate investment trusts are nothing if not diverse. They are simply one of the easiest ways for real estate investors to gain exposure to several industries. It is entirely possible to invest in commercial buildings, single-family homes, shopping malls, movie theaters, and just about any other form of income-producing property. If that wasn't enough, there's even more diversity offered up by the type of real estate investment trusts investors choose to invest in. There isn't a single type of real estate investment trust investors must choose from, but rather four. Equity real estate investment trusts, mortgage real estate investment trusts, Public non-listed real estate investment trusts. Private real estate investment trusts. What are the best real estate investment trusts to buy? The best real estate investment trusts to buy are entirely contingent on each individual's exit strategy. Investors must first understand why they are investing in real estate investment trusts before they actually open a position in any business. Some real estate investment trusts are better for income investors, while others offer more growth potential without high dividend yields. Today's most popular real estate investment trusts are in no way indicative of the best real estate investment trusts to own in the future. It is impossible to predict the stock market, as evidenced by the sell-off resulting from the recent pandemic, and perhaps even more incredible return to historic highs in less than 6 months. There's no telling what tomorrow holds for real estate investment trusts, and anyone telling you they know what to expect is lying. However, it is possible to look at current trends and extrapolate them over several years. With that in mind, these real estate investment trusts look poised for a long, prosperous run. Stag Industrial. Stag Industrial owns a number of factories, manufacturing plants, and other similar industrial locations, not the least of which are leased to clients and generating income. More importantly, Stag appears well-positioned to benefit from the growing e-commerce trend and tensions with China. E-commerce giants like Amazon will look to industrial real estate investment trusts like Stag for everything from warehouses to factories, and Stag is more than ready to meet their demand. Digital Realty Trust. As a data center real estate investment trusts, Digital Realty Trust is the primary beneficiary of 21st century digitization. With more employees working from home, more companies turn to the cloud to ensure operations continue. DLR has seen demand for its warehouses increase exponentially, and there's nothing to suggest the demand will slow down. American Tower Corporation. American Tower is one of the best real estate investment trusts out there, and it's trading at a fair price. The most promising trend working in favor of AMT at the moment appears to be its position in the upcoming 5G revolution. American Tower expects nothing less than strong growth for its assets in the 5G transformation, and there's no reason to believe one of the biggest real estate investment trusts in the world can't deliver on its promise. Americold Realty Trust, the largest public real estate investment trust specializing in cold storage. Americold owns temperature-controlled warehouses and cold storage spaces all over the world. Cold had its initial public offering in 2018 and has increased its payments to stockholders by about 5% annually. UMH Properties. With a market value of $1.1 billion, UMH Properties owns 127 manufactured housing communities in the U.S. Its current portfolio has room for plenty of expansion, including 3,500 vacant lots. UMH is benefiting from the national shortage in affordable housing options, which drives demand for manufactured housing. Past performance of real estate investment trusts. Real estate has historically performed well as an investment type, and the same can be said for real estate investment trusts. The success of real estate investment trusts over time is typically measured by the Financial Times Stock Exchange Group. Looking at numbers over the decade, real estate investment trusts have experienced an average annual return rate of 9.5%. This performance is impacted by several economic and political factors, such as interest rates, job growth outlook, treasury yield, and more. Each of these components helps real estate investment trusts to remain level through periods of economic downturn. Even over the course of the last year, the annual returns for real estate investment trusts have increased by roughly 31%. I hope now you understand how you can invest in property as a beginner, so that's it for today. And if you will find my video valuable, so don't forget to like and subscribe. We will meet again with another interesting topic. Till then, stay safe and stay happy.